you with respect to all queries with respect to Indian markets. All right. So this slide presents this gentleman, and we all know him. I mean, I don't have to tell his name. We all know him, and I think this guy, he actually established some incredible rules in our life, and we all subconsciously have been using the rules which he has laid down very well. I'm not going to discuss all his theories because I mean, what he has done throughout his lifetime is amazing. What excited me when I started my journey on passive trading was to look at his rule of theory, relativity. Now, what he said is that, there is no absolute frame of measurement in life. Everything has to be measured in terms of relativity, right? Be it example of time or sound or anything which he studied on. That really excited me to go deeper inside this concept and whether that thought process could be applied in financial market as well. And I found that it has such a huge application in financial market. So what is relativity from a financial market perspective? See, everything in this world actually works on relative framework. So when I say that I'm not feeling well, so when you say that, you actually try to say that I'm not feeling well at this moment vis-a-vis the previous moment. Or when you say that, I've succeeded in life, how do you define success? The fact that you are better than so many people, that's why you say that you have succeeded in life. So everything around us is measured in relativity in our lifestyle. Why can't we apply the same concept in stock market? With that basis, I tried to find out what are the parameters which I should consider to measure relativity in stock market. So first thing first which comes into my mind is time relativity, which is typically plotted in the chart. So when we say that this stock has gone up, when we say it has gone up, that means it has gone up vis-a-vis itself on previous historical performance wise. So you are measuring the performance of a stock with respect to the same stock on a time relative basis. Second is expectation relativity. So I can have a different level of expectation of return and you may have a different level of expectation of return. So our strategy, our way of working in the market will differ extremely depending upon our individual expectations. So I may be a shorter return expectation guy, so I will act fast. You may be a longer return expectation guy, so you will act on a relatively higher time scale. So expectation is a very important concept and it's very difficult to measure the expectation. Yes, we can take the numbers from people, but then on an individual basis, everyone will have their own numbers. Third is risk weightage opportunities. Every opportunity in the market has to be qualified by the risk. A stock which was trading at say 10 rupee, sorry, I'm going to take the example of rupee because I'm more comfortable there. If a stock is trading at a 10 rupee, the risk associated with that stock will be very different. When it trades at 12 rupee, the risk changes. When it trades at 15 rupees, the risk and the margin of safety changes. These are the broader parameters I evaluated that when I am here to trade a particular stock or any underlying, I have to figure out the time relative, the expectation which I have set for myself, and whether that price or that moment of stock trading is right for the risk which I'm comfortable at taking it. Slightly subjective thought process, but I've tried to quantify that also using some important technical parameters, which I will share with you. So when we talk about relativity in a stock, you typically say that when you compare current market price with the historical data of the same underlying, it's the time relative phenomenon which I've talked to you about. And when you compare current instrument with some other instrument which is comparable, it is called relative strength or relative weakness. So that means, I mean, it's like when we talk to our kids and we tell them that, oh, my son, you have to perform well. But we always compare it with someone that, okay, this particular person, this particular child in the school is doing very good, so you always have a benchmark. So whenever you are comparing any stock with respect to relativity of a stock, we have to have a benchmark, and that's why all these benchmarks, Nifty or other indices, they are very, very important benchmarks for us to consider. Time relativity is very simple. I mean, Dow theory clearly defines the time relativity very well, that market works in a swing. There is a bigger swing, and there is a medium term swing inside that bigger swing, and there is a shorter swings. And as a trader, our role is to figure out the starting point of the swing and the termination of the swing. This is classic time relative understanding of the stock price movement. But when we are talking about non-time related, we always try to do a benchmarking of a stock or any other financial asset. First thing, we have to establish the benchmark with the benchmark of the market, which is the indices, or you can establish the relationship with the related instrument. For example, if you're trading any banking stock, so you try to benchmark that banking stock with some other banking stock, or you benchmark the relationship with some other unrelated stock. So a banking stock can be benchmarked with a pharma stock, right? Obviously that is not the most desirable way to do it. The most desirable and the most rated way of benchmarking is obviously the benchmark which is using the Nifty or Sensex or whichever benchmark which is there in your country. You can use that. Why relativity is important? In a strong stock, there is always conservative buyers available at a particular demand zone and aggressive ones above the supply zone. So conservative buyers are available at the demand zone. Why? Because they always want to buy at a relatively reasonable value. That's why they are conservative. And aggressive buyers are the guys who are always ready to buy when the stock crosses the supply zone. Okay. These stocks will tend to outperform the broader market movement always. And our role as someone who wants to invest in these stocks to figure out which stock is actually idle stock, which is probably giving that sign of relativity or the strength. So our role is to figure out those stocks. So how do you identify this stock? So let me go to the next slide. So there are two parameters which I consider in my model, and I'm going to share with you my model. I've designed my model in TradingView and I've designed it in Stockage. I'm going to share in both these products. Two indicators which are extremely powerful indicator. One is relative strength index, which I think all of us know about it. If you are trading in market, if you don't know RSI, then there is something wrong with you. And the other one is relative strength, which is an indicator which I'll introduce you in TradingView. There is an relative strength indicator which I'll show you soon. Okay, let's take this example that there is a car race going on, and market is a car race, right? And we are here to figure out the winner of the car race, and all the cars are the stocks, right? How will you figure out which car is going to win the race or not? Two parameters. One, the distance between these two cars, that relatively this car is performing better than the previous car. If this performance stays better, then chances is there that this car will be the winner, right? And if the performance of this car relative to the second car starts going down, that means this car will probably go back and the second car will go in the front. Simple. The other thing is, what is the standalone speed of these cars? Okay. If the standalone speed of this car is high, and this car is also relatively performing better than the previous car, chances is that this car is going to be the winner. And we as an individual trader, our role is to figure out winners. We all want to become a winner, right? So we want to identify winners, stocks which will emerge as winner. So there is a formula, right? That when you are comparing relative performance of one instrument vis-a-vis the other, the simple way is to divide the price of one instrument by the other instrument. Okay, that's the most primitive way of figuring out the relativity. But I follow a logarithmic relativity where I compare the return generated by one instrument vis-a-vis the return generated by the other instrument over a period of time. Okay, so if you see price of an instrument at time t divided by price of an instrument at t1 minus t0, divided by price of a relative instrument at time t divided by price of a relative instrument at t1 minus t0 minus 1. So this is basically you're comparing the return of both these instruments and you are figuring out the relative performance of the main instrument vis-a-vis the benchmark instrument on the basis of the return differential. And this is the RSI, which is the speedometer of the car, right? For me, RSI is the speedometer of the car. So if the speed of the car is good enough, that means the momentum is there. So the conclusion is, if the momentum is there, and if the momentum is high and the relative performance is also good, that means that car is good for us, right? So RSI, we all know the formula, that it takes care of the previous 14 days momentum and figure and try to give us an indication that what will happen to that car. Okay, now we'll do a lot of practical discussions and we'll take stocks and I'll show you the model how you can develop your template for relative strength discussion. All right, I'm going to use two products, TradingView and Stockage. Stockage is created by us. As I said, we are going to simplify financial market for retail investors. So we are doing everything possible to make it simple for retail investors. And TradingView is a global product and they are doing phenomenally good work in democratizing technical analysis for retail investors. Now let me just go to the chart. Okay. So this is my chart template, which I use for my trading purpose. So I'm going to show you how to develop this template. And then you can create your own template based on your country, whichever market you are trading in. And you can do the back testing. You can see whether the model is working good for you or not. So let me just open, let me have a newer layout, okay? Okay, so this is a new layout of this stock. Okay, this is a stock called CDSL, which is traded in Indian market. Look at the movement of this stock, crazy, absolutely. And I've been recommending this stock to my associates for a long period of time. And I'll tell you the reason why I've been recommending, and that is so nicely captured in my model. Okay, so what you need to do is first thing, you make this volume bar as a separate panel so that it doesn't overlap with your price. So you move it to a new panel below. Okay, so the volume bar has come below this, and you can remove this earning and other things if you want, because for technicals we may not like to see those. So in settings, just go and remove these if you want. If you want it to be neat and clean, I prefer to be keep it neat and clean this way. First thing we have to do is we have to insert indicators. So search for indicator called relative strength index. Uh, so here it is, relative strength index. Fantastic. So we have RSI. We all know about RSI. What I want you to do is go to setting and change this to 50. Simple 50. I'm trying to keep it very simple for myself, and that's what I suggest to everyone, that 50 is a good enough number. That means if a car is traveling above 50 kilometer speed, it's a good enough speed. My decision is not based on RSI. Remember, RSI is a confirmation tool for me. My main tool is RS, which I'm going to introduce to you. So even if a stock is trading above 50 RSI, I'm comfortable with that stock. Okay. The second indicator which I want you guys to look at is search for an indicator called relative strength. You will not get as part of the building indicator. You will get it as part of the public library. Now, there are two indicators available. One is relative strength by Mr. Modelius. Another is relative strength of a stock from Bharat Trader. Now, if you are trading Indian market, I would suggest look at Bharat Trader. If you are trading global markets, look at Modelius. Formula is exactly the same. It's just the presentation is slightly different. Let me take a Modelius. Okay. So, sorry. Let me take it this one. So let me insert this. So my RS has been inserted with Modulus. Now I'll go to setting of RS, and here in input, I will change this comparative symbol. Right now is SPX, but for Indian stocks, I have to compare with Indian index, right? So I will convert this into, say, Nifty, which is India's index. Okay, and this period, I will change it to 55. Now, what is the logic of 55? My logic of 55 is that any stock which is outperforming the broader market for a period of 3 months is a good stock. It is doing relatively better than any other market, okay, than any other stock. And 55 is a Fibonacci number. And 55 more or less gives you number of trading days in 3 months. right? It may be slightly higher, but because it is Fibonacci number, I love Fibonacci numbers. So that's why I've kept 55 as a base for me. You can do your own front testing, back testing with different numbers and see which one works well in your market. For me, 55 works, so I'm just keeping it 55. Okay. And okay. Now, this is a template where we have the closing price. This is a daily chart. We have RSI and we have RS here. Let me just move RS up and keep RSI down because RS is my main indicator. All right. If I would have done the same thing with Bharat Trader, I would insert the indicator and I will search for Bharat Trader. So this is a Bharat Trader. Let me insert it. What Bharat Trader did, he's a very good friend. He created this for specifically for Indian guys. You go to setting, same thing. You just do 55. Just remove the show reference label. See exactly the same thing, right? It's just that he has added colors and he has added a more clarity for Indian market participant. So I'll remove this Bharat Trader and I'll continue with Modhilius. Okay. Now, what is the other thing required? I also love moving averages. I think moving averages are like those grandfathers, and you can't get away with them. You have to love them because they are so sweet. So I prefer to insert moving averages. So four moving averages which I have 21, 55, 100 and 200. So let me just insert. So there is an indicator in TradingView called three moving average. This is a great indicator which was found by these guys called Advent Trading and it's free. So you can insert this. Here you will get an opportunity to add three moving averages together as a single indicator. So you can convert this 55, 100, 200 and okay. So these are three moving averages together. Now I need to insert one moving average, which is 21 period moving average. So let's insert exponential moving average and let's convert this into 21. Why 21? Because I'm a swing trader and I keep my position for a period of say 20 days to 90 days, whatever the case may be. If you are an extremely short-term trader, maybe for 7 days or so, you may also like to see a 9-period moving average, but I'm comfortable with my model and I prefer to share my model with all of you. Okay, so this is the template. Okay, now you can share this template. So I'll just share this template. So I'll save it as, let me rename. The name of this could be trade. Okay, trading wave. Okay, cool. So our template is ready, right? Now, what do I want you to do? Okay, what I want you to do is if a stock, hear me out, the strategy, okay? Strategy is very simple. If a stock is RS is more than zero, which is here, see what has happened to this stock? RS is more than zero, okay? And the stock is trading above previous swing high, okay? So this stock previous swing is here. So RS above zero and the stock is trading above previous swing high. Okay. And RSI is more than 50. That means this stock is a strong stock. Ride this stock. Okay. Most likely the stock, if it is strong, it will remain strong and you will not exit the position till the stock is strong. Look at this stock. ARS went above zero, right? Why RS went above zero? Because the stock started outperforming the market aggressively. So RS went above zero. RSI is above 55. That means there is a momentum. And stock is also trading above previous swing high. Okay. Till RS is above zero, you hold on to this stock. The other advantage of these kind of stocks is that not all stocks will keep on going up, right? It doesn't work that way. It can't be linear. It will go up, it will correct, it will go up, it will correct. Typically, what I have seen that a strong stock, when it corrects, it takes support around one of these moving averages. Okay, so look at this. Every time CDSL has fallen, it has taken support around 21 period moving average and it has again gone up. Why it has gone up? Because RS has been strong. Okay. Now, people can have this that I mean, this is a movement which we have seen in last 1 year, and we all have been blessed to see this kind of a market. I've never, in 2008, I witnessed this kind of a market, but I was very, new in the market that time. But this time I was ready for a better move in the market, so I made a lot of money because of this model and because of the movement which market has given. It may not happen with you all the time. Okay, and coming few months we can have tougher market, and probably after a few years, maybe coming few months we still have positivity, but after a few months, maybe few years, we'll see again tough market coming in. Whenever market gives you a hint that the stock is becoming weak, it's time to exit that stock. Now, you can tell me that, sir, when the market will get weak, that means RS will go down below zero. By that time, stock is already corrected. So when will we exit? So the solution to that problem is that look at the shorter tenure chart as well together. And whenever shorter tenure gives you a negative signal, then exit and re-enter if the shorter tenure starts giving you positive signal once again. What is the shorter tenure we are going to use? So I use 2 hourly chart. Why I use 2 hourly chart? Because Indian market is approximately 6 hour duration, and you can divide this into 2 hourly buckets. So morning 2 hourly, afternoon 2 hourly, and the evening 2 hourly. So it really helps to figure out the change in the momentum in a stock in those 2 hourly chart. So in this, I add one more mini chart with the same template. Everything remains the same, and I convert this into a 2 hourly chart. Okay. Now, advantage of this is that it will always give you a signal before daily chart. So, if suppose you want more active engagement in this stock price movement, then whenever the stock goes below RS, then probably you can exit the stock. One more indicator which I follow in 2 hourly chart. In fact, I don't follow moving average in 2 hourly chart, so let me remove them. One indicator which I love for 2 hourly chart is super trend indicator. So let me insert super trend in my 2 hourly chart. So this is super trend. Yeah, so this is super trend. So my model says that if a super trend is positive in 2 hourly chart, and if RS is also greater than zero in 2 hourly chart, that means the short term trend is intact. There is no reason to be worried. But the moment super trend go negative and RS also goes below zero in 2 hourly chart, exit your trade. Exit your trade. Maybe the stock will still show strength in the end of the day, but still exit your trade for the time being. If suppose again super trend becomes positive and RS again goes above zero, and your end of the day chart is also showing strength, then re-enter. It's always good to exit when you feel something is going wrong. Even if you have to re-enter at a higher price, there is no problem, because even if you have to spend 4 to 5% as an impact cost, you're still riding the rally even after you have to pay 5%, because these models have potential to give you 30-40% rally if you ride the right stocks in the right market scenario. So this is the my model. So let me show you my template. Now this is my template. Uh, so this is the template where this is the line chart. Why I use line chart? Because I think line chart, end of the day, closing price on the day for me is important. And 2 hourly, I look at high, low, everything. So that's why candlestick in 2 hourly is there. There is one more indicator in trading view called TL enhanced volume, which gives more insight about the volume. But you can use this or you may continue using this. It's all the same. But obviously, it gives me more insight. So you can insert this. This is also free. So you can insert TL enhanced volume indicator as a volume classifier. So if it is green, means there is a more active buying volume, and it is pink, that means there is some kind of a selling which has happened. So now you see the stock, and we can discuss a lot of stock. Look at this stock NIT. So the stock previous swing high gave a breakout here, and RS went above zero, RSI above 55. Look at the movement, right? The idea is that whenever the stock is giving you strong momentum, with RSI giving you the sign of momentum, and stock is also showing you a sustainable strength in the market, I think this is a good opportunity to enter the stock. How will you manage your risk? You enter with a stop loss of low of candle when the breakout happened, or maybe you can take one candle before that breakout candle, because typically breakout candle gets manipulated. So you can take one candle before the breakout candle as a stop loss, and you can take profit, which is two times, at least two times of that stop loss level. Uh, Book 50% profit. I don't book 100%. I book 50% profit, and just 50% I'll trail. And when will I book? When 2 hourly chart suggests me that super trend is also negative and RS has also gone down. For example, here, see, RS has gone down, but super trend is positive, so I have not exited my position. Right now, super trend is negative, but RS is above zero, so I have not exited my position. The moment both happens, I'll exit. And if both comes back again to that point, I will re-enter, because end of the day, it is still a strong stock for me. Now the question is that how to identify stocks. Okay, there are two ways to identify stocks. One is you have your own stock list. For example, I have these own stock list, and I prefer to take positions in only these stock lists whenever there is impressive action happening in these stocks. Okay, and I think that is the most it's an idealistic way of working in the market, to have your own 100, stocks and only look at them and trade when there is an opportunity. But when you trade with very big quantity. Okay, look at this stock, BSE, Bombay Stock Exchange, which is listed also, and it's one of the largest stock exchanges in India. Look at this movement. I have highlighted RSI more than 50, RS more than zero, and it has given a breakout. And what movement? What do you want? What else do you want? Similarly, there is a new stock, Motilal Oswal. Look at this movement after the breakout. So previous swing breakout is important, and if it is still above this, you continue holding on to the position because it is still above your strength level. So either you do that, or what we have done in Stockage. Stockage is a tool which is focusing on creating ready-made analytics for serious market participants. It has a lot of free data points and analytics which are extremely useful. So in Stockage we have these price scans, and in price scans we have created these RS55 scans, okay, where I've given you ready-made parameters. All you need to do is select these parameters and identify stocks which are meeting these parameters, and you can track these stocks. One of the thing which I did is I created a combination scan. In Stockage you can actually create a combination scan, so you can add multiple scans to create your own combinations. So one of the combination which I created and we hosted in Stockage as a strategy is the eagle scan. What is eagle? If you see eagle bird, it's very unique. Eagle bird stays above all other birds. It has its own life, and it at times goes above the cloud. So identifying stocks which are eagle stocks and have a very high momentum and could go higher highs and higher and keep on going up. You see, the scan which I created for eagle is stocks which are within 52-week high zone, stocks which are outperforming the benchmark index for 1 week and 3 months, stock outperforming benchmark index from RS perspective, and high return on equity, consistent cash from operations, consistent cash generating companies, and increase in institutional shareholding. If I see the list of stocks which are eagle, these are the hyper stocks which have very high potential of continuously generating higher return. So what I did is I identified these stocks using Stockage. I created my Rocket Watch here, and whenever I see any major breakouts happening in these eagle stocks, look at this stock, CAMS. Same model, look at this stock, breakout and continuously going up. CDSN, breakout, all these are eagle stocks. Once a stock has become eagle, that means there is a high momentum. Fundamentally, they are good and there is a high momentum right now. All you need to do is just ride the momentum and stay put till the momentum is getting weak. You exit if the momentum is getting weak, but you re-enter if the momentum continues the way it is there, right? So this is the more or less the model which I have. I use both TradingView and Stockage very religiously. to figure out stocks where the momentum could be and just participate in that momentum with strength and momentum as my indicators to measure the momentum in this stock. So this is my model. I hope you liked it. I'm happy to answer any query which Philip may have. I hope you find this model useful. So Philip, I'll be very, very glad to take your queries on this model.
Hey Vivek, that was a really insightful presentation and demonstration. I'm sure the summit participants now have a better understanding of how to go about implementing the momentum trading strategy that you advocate using RSI and relative strength. Now, to help the participants clarify some of the points that you brought out earlier on, shall we head into the Q&A segment right now?
Absolutely.
All right, fantastic. All right, so I just want to go up to a little bit of the big picture first before we dive more deeper into all the different criteria and the factors that you use in your strategy. I remember you mentioned in your demonstration earlier on that typically you have about 150 stocks in your watch list, and then you try to apply those criteria that you mentioned in your presentation on these 150 stocks. So my question to you is, what are some of the ways, or in particularly, how do you actually filter down the many hundreds of stocks out there into that 150 stocks in your watch list in a manageable way? Can you share a little bit more thoughts about this part of your process and your workflow?
Yes. So there are two ways. One is I read a lot, and if I get to know about a stock or about any industry which I feel also has a underlying theme which will make that industry look bullish, then I immediately add that stock as part of my tracker. Okay. If you have a great understanding of business of a company or a sector, and if you follow that price movement along with that sector understanding, it's like absolutely amazing setup. So that's one method. The other method is screens. So in stockage we have these screens, so we keep on getting outputs, stock ideas. And as I said, the eagle is one of the examples where I may not understand the business, but the fact that the stock is output is been produced out of stockage, I use those stocks. So two watch lists. One is my own watch list based on my understanding of the business, and the other is based on the screens which is getting generated out of stockage.
I see. So in a way, what you are saying is that it might not even be necessary to have that 100 and 150 stocks in your watch list, right? Because you can use tools like Stock Edge, and on a regular basis, you just straight away filter the entire market and see the list that is generated out, and then you just look through the list to see which other ones you want to trade. Is that another way instead of just having 150 stocks in your watch list as well?
I mean, if you do keep on just scanning, then you'll keep on adding that 150 to 170, 200, 250. So the whole objective of having limited stocks will get defeated. So obviously, if you feel any stock is not doing right for you, then you should exit that stock. You should get it out of your watch list. So an optimum size of a watch list. So every watch list should not have more than 100 stocks. So 100 or 100. So 200 should be the ideal max stocks, because in India, there are around 600 to 700 stocks which are actively traded. Okay. Where the impact cost of trading is low. So you will obviously not go beyond 200 numbers if 600 is or 700 is a broader number. But in some other country, probably more and more stocks may be active. So you can go with a larger number.
I see. And how about the market capitalization and the price of the stocks that you look to trade using this particular strategy? Because one common thing that we often see is that smaller cap stocks, when they start to run, they tend to really outperform the broad market by a lot more. So is that also something of your consideration when you use this strategy? Do you look at trading lower price stock, look at trading smaller cap stocks in order to outperform the broad market?
So smaller cap stocks you can't compare with Nifty, because I mean Nifty is far bigger than all these small value stocks in terms of market capitalization. So I don't run RS system on these smaller cap companies. Smaller cap investment will always be fundamental driven and pure price behavior. It cannot be relatively evaluated.
I see. So which means in a way, this strategy should be applied on those very high profile stocks, big cap stocks, rather than using it on a smaller cap
Large
stocks,
cap
right?
and mid cap. Mid cap is also fine. So I would
Okay.
say in India, more than 1,000 crore in rupee terms, market capitalization. That I think is a fair filtering criteria. Stock below 1,000 crores or 700, 800 crores. I don't think so. You should use Nifty benchmarking. Then you have to benchmark with Nifty mid cap or Nifty small cap indices, which are separate indices, which are more comparable for those stocks.
I see, I see. So let me go slightly deeper into the strategy that you mentioned earlier on. So one of the criteria is to check and make sure that the stock that you're looking to trade, the RSI itself is at least above 50, right? So in
Yeah.
a way, does it matter whether the RSI of that particular stock has just crossed above 50? Has it been above 50 for a period of time? Or is it like, for example, if it's like trending lower and going to hit below the 50 soon, does it also matter when that situation arises?
Well, as I said, that my model is more RS oriented and RSI is more of a confirmation. So it's
Mm.
not that if RSI is below 50, I will not look at that stock. I will be more alert. But yes, if any stock RS is good and RSI is above 50, that helps me to go slightly aggressive on that stock because it gives me a confirmation that the momentum is there. So my criteria is not RSI driven, is RS driven.
I see. So let's move on to the RS part of it. So one of the most important thing is you want to see the RS being above zero, right? So
Yeah.
again, in the same situation, when the RS is just starting to go above zero,
Yeah.
or it has been above zero and very far from zero for a long period of time already, does any of this situation actually matters to you when selecting the stock to trade?
Of course, I mean, the stock which is just around zero, it has a higher chance of giving me higher return. The stock which is already above zero and trading far higher, the stock is already moved up. So my risk reward ratio is not as favorable. So the best thing is to figure out stocks which are around zero or probably around zero point 0.1, so that there is a confirmation that yes, the stock has become strong and this point 0.1 can actually become 1. So let's ride the rally.
I see, I see. So does that mean that for a stock that has just gone from negative to positive RS, it would mean that before you actually see this stock at this particular point in time, it was actually underperforming the broad market, but it has just started to slightly outperform the market and you want to get in at that very point in time. Is that generally the principle behind?
Yes, that is the principle behind. And there is one more thought process. I mean, I have just touched few things because of the limitation of time. There is one more thought process that say a stock has a very negative RS and the stock has started giving you a signal of getting into strength, but the RS is still below zero. But it has already started reversing from the bottom, right? So that stock also becomes very interesting because that could be a contrarian play. That if the stock is telling you that I am ready to become strong, it will take me some time to reach above zero. Why aren't you looking at me even if I'm trying to make an attempt? So that theory is also there. Any stock where RS has been recovering for the last 3 days is also a strong stock.
Ah, okay. So does that mean that that's also one criteria that you could potentially look at getting into a stock, maybe with a smaller position first. Then once it goes above zero, then you add on to it. Is that one of the strategy that you could potentially be
Absolutely,
using as well?
absolutely, absolutely.
I see, I see. And I just want to check with you as well. Most strategy, in fact, any strategies usually have both its pros and the cons side of it. So a lot of time, some gurus say that, oh, use my strategy is the perfect strategy, but generally there's also downside to it. So in terms of this particular set of strategy that you use, what do you think are some of the situations that could have cons to this strategy? And what's the situation that it might happen? Let's say, for example, losing streaks and stuff like that. When does it usually happen, and how do you handle those situations when it's actually the cons are actually more obvious than the pros?
The problem with this strategy is that if market goes down and your stock also goes down, you still lose money, but the RS may still be above zero. So in that situation, you have to be mentally extremely strong that it's okay if I'm losing money because market is going down. My stock is not going as down as market is going down. That is actually the application of temperament that it's okay. I mean, not many people have that nerves to handle if they see mark to market losses in their books, right? That's a problem of this strategy. But the solution to that problem I've given that if you look at the shorter tenure, RS 2 hourly, then you obviously will exit before
Way before
before
the
market.
sharp downturn come, right?
Yeah. It's just that
I
you have
see.
to, number of trades will go up, but then at least people who need good sleep in the night, they can use those 2 hourly or hourly, whatever you want to exit before. But then number of trades will go up, but that's okay. I mean, if you have to sleep properly, you can compromise on that.
I see. And now the market currently is still generally bullish across the world right now. So using this strategy seems to be a very good way of actually tapping into the bullishness of the stock market. Now, my question is, in time to come, when there is a sharp correction coming in or maybe a crash coming in, how would you handle that situation, assuming that you are still trading this strategy? Would you advocate using this strategy to trade on the downside, on the shorting side of it, or do you just simply just hold on to the trade or just remain out of the market and not use this strategy for a bear market condition?
I mean, hold on to the trade. I've seen the strategy working fine in March 2020 fall. And yes, I have seen mark to market losses, but that's okay. That's part of the business. But the moment I saw recovery happening in March, lot of stocks started showing me phenomenal outperformances, and I was able to deploy more capital in those stocks. These are once in a lifetime opportunities when recovery happens, and you can go all in those recovery. So you have
I
to be
see.
mentally prepared that loss will happen in this kind of Six Sigma event, which is fine.
I see. And so, in terms of using this strategy, do you use any kind of, let's say, for the first time you get into a trade, do you use any kind of like a stop loss to cut loss in case things doesn't work out, or you also just use the 2 hours time frame for the same stop loss strategy?
I use 2 hourly time frame. I don't use a stop loss, but I always suggest people who are coming into the market to have candle low or one candle below that candle low as a stop loss, just to be on the safer side. But now I don't use candle stop loss. I typically use 2 hourly as a stop loss, and whenever stock shows me weakness, I exit the trade because I don't have a
Okay.
fixed take profit also. I always trail my profit, and I will square up once that reversal happens.
I see. So if you don't have a definite cut loss level to actually exit a stock, if let's say the trade doesn't work out, how do you go about sizing your trade for that particular trade then as part of your portfolio?
No, so my most of the trades have same size. So I know that in this stock I have to go to so much money, and I'll keep on adding more money. If my breakouts, if my trend is on the right side, I'll keep on adding more positions. Right? So I don't size my trade depending upon the opportunity. And this have evolved over a period of time. I'll never advise people who have started to do this. When you start, you should have a stop loss, you should have a take profit, take 50% profit, trail the other one. But I have been doing this, so I understand that even if I have to trail my profit and loss for a longer time zone, I can manage that risk. I can be mentally more stronger if I have to do that. So I allocate fixed sum for every trade.
I see. And as long as the trade is working out, then you will just hold on to it, right?
And I will keep on building. I'll keep on adding my position, because if my trade is right, I have to increase my bet. Otherwise, how will I make huge money from a right trade?
Okay, so question on that. After you enter the first trade, based on all those criteria that you mentioned in your strategy, under what situations do you add on again? What do you need to see before you feel comfortable about adding on to it?
Typically, what happens in the stock is it goes up like this and it will correct. I will not exit because the relative strength is still strong. And then again, it will start going up. So whenever it gives a breakout from previous swing high, I re-enter again with more capital.
Okay. So after you enter the first time, the subsequent time you enter is based on it, the price moving to a new swing high, and you will add on to it, right?
Absolutely.
Okay. And then again, you will accumulate your exits for all these different times of position based on that 2 hour
Correct.
method. So when you exit, you actually exit most of them all at the same time?
All zero.
All zero at the same time. Okay.
Yep.
Okay. Fantastic, fantastic. All right, so I think that is something that is realistic for an independent trader to actually implement. I mean, the theory of it, the principle of it makes a lot of sense. So how can a part-time retail trader be more efficient in the way they actually execute this strategy? So you mentioned using stock edge earlier on. Can you share, if let's say, for example, if I am a part-time retail trader, I want to implement this strategy that you have just shared, how would my daily workflow look like or weekly workflow look like from your perspective?
The part-time trader should do weekend trading. Weekend trading means do weekend homework, look at all charts, 500 charts in India, major 500 charts, and figure out stocks where the pattern is favorable to your setup, and then put an alert in Stockage or TradingView. And whenever the alert is getting triggered in during the weekday, then only trade. Don't look at the market full day on weekday because it's not your job. So that works fantastically for weekend trader, means part-time traders.
How about the execution part of it? Because since the exit is not like a specific price exit, how do you actually manage that as a part-time retail trader then?
So you exit. See, if you are looking at 2 hourly chart, that means you are looking at market every 2 hourly, right? If you are not looking at 2 hourly chart, if you are looking at only EOD, then look at the chart on the daily basis. Your positions, obviously, you have to see your positions on the end of the day basis, that what has happened to your stocks. And if you see that the EOD has become negative, then next day morning you square up your trade.
Okay. So that means on a day-by-day basis, you need to at least like log in, take a look, see whether it has breached any of the criteria that for your open position, whether it has breached any criteria that you are looking at. If it has breached, then you just exit the day after or something like that. Is that generally what you
Of
suggest?
course, of course. I mean, if you are
Okay.
active in the market, you have to look at the price at least on a daily basis, end of the day. And that's why
So
Stockage is an EOD app. It's not a real time app. So we want people to do homework for half an hour after dinner and to see what is happening in their trade, what is happening in the stocks, and then plan whether next day they want to square up in the morning or not.
I see. Just simple management. So in a way, your strategy is actually more or less, from the way I look at it, is totally quantifiable, right? Right.
Yeah.
So does that mean that you can actually develop an algorithm attached to the execution platform to just implement this on its own? What's your thoughts about that?
Yes, yes, of course you can. I mean, there are people who have developed this algorithm and they are trading the strategy. So, I mean, for retail, it's difficult to develop the algorithm because you need that backend ecosystem for that. In India, it's still evolving, but there are many algorithm giants who have created algorithm on RS and trading RS on based on that.
I see, I see. All right, great. So I believe that the clarification on your strategy has been pretty in-depth, and I think it's going to be very helpful for the summit participants already. I want to just quickly spend maybe 5-10 minutes just to move on to the great work that you have been doing over the years in terms of educating the retail traders angle. So I believe that from eLearn Markets, you have bring on board, like you mentioned earlier on, more than 200 trading experts and mentors to share their experiences. And there are like millions of people have already learned from eLearn Markets. So from your perspective, if let's say I am a part-time retail trader and I really want to find a mentor to learn from, since you have dealt with so many of the trading experts and mentors out there, what would be your advice in terms of finding that right trading mentor for me to actually go and learn from? What are some of the criteria I need to watch out for? Firstly, to make sure that I'm not getting a scam guru, pay money to a scam guru. And secondly, if it's not a scam guru, how do I know what kind of mentor should I learn from that would be the most ideal for me?
See, if you are looking for a mentor, first of all, yes, a mentor is needed because market, as I said, is not just about technique, it's also about temperament. And a mentor or a guru helps you to build that temperament, gives you that, at every stage of your journey, gives you that query resolution that, okay, this is a question. Because if you just listen to free content in internet, I mean, you can consume content, but then you will have problems when you are implementing those content. Then who do you approach to solve the problems? That's where a guru or a mentor is needed. uh, how to identify a mentor? I think you will have to go through that process of listening to people, getting their feedback, listening to the social listing of what other people are talking about people, and join a mentorship program. It's a decision one has to take. I mean, when you buy a TV, of a brand, you believe that brand. That's why you buy TV or any other articles, right? So it's finally a call you have to take, and you have to pray that things work for you. You can talk to a mentor before joining and get sure that your objective and what the mentor is actually into both are in sync. Then only it makes sense. You say that I want to do intraday trading, and the mentor is not doing intraday trading on his own, then how will their objective get made? So if anyone wants to join, we have a mentorship program in Elon Markets where I'm there, Chetan is there, Shorodip is there. So we'll three together, we mentor people who are interested in learning market on a part-time basis. So if you are looking for a career which will make you a part-time trader, or want to make money from market as a trader, you can look out for our TMP program in Elon Markets and inquire about it and find out whether we are the right mentors for you.
I see. And I'm very sure that after working with so many trading students over the years, there must be quite a number of insights that you have seen dealing or working with all these students before. What do you think are some of the major issues that hinders, let's say, a new trader or a trader who has somehow been trading for a few years but is still not seeing results? What are some of the major issues that are hindering them from become proficient and profitable from your angle?
I think people take time to develop that nerves, that impulse, and they're still connected with a lot of noise. So even if they learn right things from us, they still consume noise from other sources and make the same mistake they probably would have been making before the mentorship program. So that whole discipline of only focusing on what has been taught and believing in oneself, it takes a lot of time for people to get into that comfort zone of believing in own ability, because we have this habit of believing that other people are far better than us, right? And India specifically, we have seen that the whole culture of I know he's better, so let me just follow him. I don't know how it works in global markets. So people who develop their own conviction and confidence about their ability, they do very well. They become independent trader.
I see. And it's also very important, I suppose, that you understand yourself very well and try not to keep jumping around. I think that's also one of the biggest issue, right? For new traders, they keep on trying things for a few trades, then they jump on to the next one. Is that something you notice personally as well?
Not really. I think people after going through a proper training, people become disciplined, because the whole training process makes them believe that the discipline is the key to succeed in market.
I see. Fantastic. Hey, Vivek, this has been a really fruitful session for me. And thanks again for taking so much time, despite you feeling unwell, to actually spend all this time with me to present, demonstrate, and answer all the questions that I have. I'm sure the summit participants benefited greatly from your sharing as well. So thank you again so much for your participation in the summit.
It's my pleasure, Philip. Thank you so much for giving this opportunity. I am trying my best to recover from the health issue, but it was always a pleasure to interact with you. Thank you.
Fantastic. Thank you so much. Now, for those of you watching this summit video like right now, if you would like to keep in touch with Vivek and learn more about what he does at eLearn Markets as well as Stock Edge, remember to click on the web link provided below this summit video to learn more. And finally, if you would like to review Vivek's summit video beyond this summit, you can also check out our TraderWave TV service, which is in short the Netflix for trading education. With that, we have come to the end of this presentation. I'm your summit host, Philip Teo, and I hope you will continue to learn and apply the teachings from the many wonderful speakers on board this virtual summit. Take care, and we talk soon.